Guys, we had yet again another crazy day in the stock market today. Go figure, right? We had the S&P go down 0.8%. We had the Russell down over 2%. We had the NASDAQ 100 down 1.7%, as the Dow only went down 0.1%. So we have to break it down, go over stocks, charts, my thoughts on the markets. We'll briefly talk about the jobs report, and we'll cover what I'm doing in the market. So sit back, relax, hit the like button, subscribe, check out my Patreon if you guys want all my real-time moves in the markets, and you all could get 50 free bucks from M1 Finance and 2 stocks from Webull up to $1,600. All of those are linked down below. And with that being said, let's get into it. So SPY ended up getting trapped this morning, right? The rally that we saw after the jobs report came out ended up being a bull trap, both on SPY, on Triple Q, on pretty much all of these indexes, guys. You guys can see Triple Q ran up to the 180 SMA, got rejected. We ended up taking the lows out. We hit a fresh low on this 10-day chart. We hit 378. SPY ended up hitting also a fresh low. We took the lows out from the previous 2 days. We hit 448.92. The Russell took a low out as well. We hit 2143. And mind you guys, the Russell is yet again trading towards the bottom of this horizontal channel, this range that we've been in pretty much for a year at this point. So if buyers step in, maybe we get a nice rally on the Russell, but the second this thing breaks 2150-40, that general range, this might see a leg down. And at that point in time, I'll probably be buying more IJR, which is one of my core small cap ETFs. In fact, I actually bought a mid-cap ETF today. I added more to my position. This is a mid-cap growth. It's ticker symbol VOT. So these are what I'm looking at if small mid-caps get hit, IJR, VOT, and the Dow. Let's pop the Dow up real quick. Let's see what's going on. I'm pretty sure this got trapped as well, right? Yeah, we saw a bit of a rally. We hit 34.8 earlier. We almost took the lows out from 2 days ago, but it's pretty much the same, right? It's downtrending. We're not breaking out yet, and these past couple of days have straight up been like 10 bull traps. Maybe not 10 bull traps, but it's just been mini rally after bigger leg down, mini rally after a bigger leg down, and it's just been, again, a bunch of bull traps. So be careful out there. And as always, I'd love to know your thoughts down below in the comments. Now that we got the quick technical breakdown out of the way, let's pop up the job growth, well, in this case, it's not really growth considering they missed the estimates, the expectations. Let me just make my face smaller very quickly here, and we'll just skim through these two CNBC articles, guys. Nothing crazy. So job growth, the headline here, job growth disappoints in November with a gain of just 210,000 jobs despite the high growth that was expected. And that's the reality of things, right? Sometimes growth does not come in as what was expected. And we can see here non-farm payrolls increased by 210,000 in November following a gain of 546 in the previous month. So that's a big drop month over month. And one good thing here, I guess, the good thing that came out of this is despite the big hiring miss, the unemployment rate fell to 4.2%, a 0.4% point decline that came even with the rising labor force participation. And we're not going to go too deep into all these graphs, but one thing I do want to show you, actually, what is this here? Difference in total U.S. employment from pre-pandemic levels in February 2020. So that's an interesting chart there that shows, what is this so again? The employment from pre-pandemic levels. That's interesting there. U.S. unemployment rate, this chart, you guys can see a huge spike in 2020, all the way to 15% almost, a little bit under. Now we're sitting at 4.2. And if you want to see how the November jobs changed in 1 month in terms of where they lost, where they gained, you can see a lot of the gains, most of them came in professional and business services, 90K there, transportation and warehousing, about 50K there, manufacturing, 31K, same with construction, leisure and hospitality, about 23K, financial activities, about 13K, 8K from wholesale trade, healthcare and social assistance, 5.7K. Then we saw a loss in jobs in the utilities, right? Negative 400. information, negative 2K, mining and logging, negative 2K, retail trade, 20K, and we lost 25,000 government jobs as well, which for all the libertarians out there, they're probably jumping and clapping up and down right now. The government is losing jobs. So that's a quick little breakdown. I don't want to spend too much time on it because we do have to talk about some stocks, but that's a quick little breakdown of where we saw jobs gained and lost, unemployment rate, all that good stuff. So what do you guys think? Drop me a comment down below. Make sure to hit the like button as well if you are finding value in this video thus far. And with that being said, let's talk about some stocks that are setting up decently, some nicer than others. Stock number one is Pepsi, ticker symbol PEP. This did very well today, despite the overall volatility, and I almost forgot to mention the VIX went up 9.7% today. The markets did great, despite the, well, not the markets. I mean, Pepsi did great despite the volatility. And what we're noticing here on the 4-hour chart is a wedge, first and foremost, lower highs, higher lows at the same time, and we're noticing it's actually breaking out of the wedge. We're trading above both moving averages, and as of now, we took out the high from earlier this week at 164, 164.50. Now we're trading at 164.71. So Pepsi looks pretty good. I think it's, and a lot of these Dow stocks are looking pretty good as well. So yeah, guys, I think this is one of the better setups that I could find, and I promise I was looking through charts today for a good amount of time, and literally I couldn't find any really good looking setups. That's the kind of market we're in right now. Nothing really looks good to my liking. I'm sure there's good ones out there, but I don't have the capacity to look at thousands of charts. But from what I looked at least 100 charts today. Nothing really stood out to me that was insanely good looking, right? Other than Pepsi. Well, and some of the other ones we're going to talk about today, of course. But Pepsi's really, it looks pretty solid. I think we could make a move back to the all-time highs. Maybe we even take those all-time highs out, see a new all-time high. So keep your eyes on Pepsi, guys. AMD is also taking a beating today, like most other growth stocks, right? AMD went down 4.4%, down about $7. It closed at 144. The recent all-time high was 164. So now it's down 20% or about 13, or not 20%, $20 or about 13% from the recent all-time high. And I covered this maybe yesterday or the day before. I mentioned to you guys, look, if AMD pulls towards the 180 SMA, which now it did, we might expect a short-term rally. We could expect that, in my opinion. And we're kind of already seeing that. If I pull up the intraday chart, it's not crazy, but we did break out at close. This thing went from 141 to now 144. That's a decent rally. So I'm not saying this is a breakout or anything because it's still looking like a falling knife overall on the 20-day chart and on the 4-hour, but it's one worth monitoring. And now that I'm thinking about it, I think the whole market rallied at the end of the day. Let me show you guys SPY on the intraday. Yeah, look, we went from 460 to 448, which was an intraday drop of 2.5%, and then we broke out at close from before close from 448.90 up to about 494. So we did see a bit. That's a pretty decent run. We saw about a 1% run heading into power hour or in power hour. And that's pretty much what caused, AMD to go up now that I'm thinking about it. And some of these other stocks as well that we're going to go into. Stock number 3 is Intel. And before you guys call me a boomer, Stas, what are you doing? Intel, it's a thing of the past. NVIDIA, AMD, that's where the money's at. Yes, you're right. In the past couple of months, year, 2 years, couple of years, quite frankly, that's where the money has been. But I'm in the camp that thinks Intel is not just going to go out of business. I think this company's still going to be around. And I personally own some Intel. I own Intel at about $54. If I remember correctly, I am down, admittedly, about $4 or $5 per share, which is fine. I'm admittedly down on Intel. And the 3-year chart to me looks pretty good, quite honestly. We have a double top at about $69, $70 per share. And we're obviously way off of that resistance point. Again, we're down about 30% from that point. And as of now, excuse me, guys, we're holding the bottom of the wedge. We're trading towards the bottom of the wedge on this 3-year chart. We've been uptrending for a couple years, right? Past 3 years, pretty religiously, higher lows, all that good stuff. But recently, we've been, in the past 6-7 months, 8 months almost, we've been making lower highs as well, which is where that big 30% drop started about 8 months ago. So technically speaking, this looks decent. If you're buying it here, it's and I'm not telling you to buy it, by the way, but I think it's a decent risk reward. And you can notice the proof's in the pudding, guys. Look at Intel here. You notice how the past when did this sell-off start? First of all, let's go to SPY quickly. The sell-off started, the big sell-off started on the 22nd of November, right? And that was at 473. Now we're at 453. 453. If I can slow my talking here down a little bit, guys. My grammar sucks too. We're down about 4% on SPY. Triple Q, the Russell, they're down even more. And Intel in that same time period, from the 22nd to now, it is literally down 2%, a little bit more. So it's holding up compared to the overall markets. That's the point that I'm trying to make here, and that's also a point, or that's another thing worth mentioning is the fact that it's not dropping as much as the overall markets. That goes to show that investors and traders don't want to just dump out of their Intel because they think it's a good value here. They think, why sell out at 30% levels that are very suppressed levels? And the fact that they're not dropping Intel as much as the market, that's another reason why not to sell out. So investors and traders, they're looking at this as a value play. Value plays typically hold up more in volatile markets than, let's say, growth plays, and the proof's in the pudding. So Intel looks good. It makes me more confident in my 55 price level here that it's not really tanking at all. And, it makes me want to buy more, quite frankly. And I'm planning on doing that. Again, which is why we're talking about it in this video. So that's a little side tangent, but Intel, I really like it. Do they pay? Actually, yeah, they do pay a dividend, because I got an alert that I'm getting a dividend in like a couple of weeks. I think their dividend, or even now, their pay date might literally be this week. But either way, Intel looks pretty good. Upstart, I'm also looking at. The 4-hour chart doesn't look as great. We're pretty much a falling knife. We're downtrending, all that stuff. But one thing I am noticing on this 4-hour chart is a bit of a bullish oh my goodness, guys. Bullish divergence is what I'm trying to say. Let me get some water. Yeah, that's what I'm noticing. Bullish divergence, and the yearly chart looks pretty good as well. Look at this. Upstart yearly chart. We're towards the bottom of the channel here, and we're right by where the uptrend should continue, if it does continue, which is not guaranteed. But this chart looks decent. If you have a time horizon, couple months, whatever, I'm not telling you what to do again, but this might be one worth looking at for maybe a move back to 280, 290. If that breaks, we could start to test this next spot, this next channel, or gap, whatever you want to call it, up to 315, 350, 400 would be pushing it a bit. But, hey, it's never off the table, right? So watch out for Upstart. I like it. Adobe is one I also like here. It's completely, this thing just got destroyed today. It was a wrecking ball. This was down 10% at one point. I think, it closed down 8%, $55 in the red. And just yesterday, we hit 674, right? And at the low today, we were at 604. So this thing was down 11% pretty much overnight. So we got into correction territory overnight. And rightfully so. This stock was just very hot. It was $400 back in March. It went to $700. So it's still well above what it was in March, April, May, and the uptrend's still holding, which is why I'm watching it. And if we look at what chart here, the yearly chart, we're right by the 180 moving average, right? This is where buyers have stepped in on two other big dips that Adobe had. A couple of them actually. Back in 2020, it fell to 460. We bounced off the moving average. Also, May 2021, it bounced off. And if you guys are my Patreon, you know that I actually bought this dip on Adobe, right? I bought this dip back in October. When this thing went from 680 down to about 570, I was buying that dip up. Admittedly, I sold too early, but hey, I still made money. I bought the dip. Now I'm looking to do the same. So we hit 700. Now we're down to 600. Probably will go lower. 580, 590, low 600s. I will be looking at Adobe very seriously. And if you guys remember earlier in this video, we talked about the Dow, the S&P, the Russell, the NASDAQ, like we always do. And we talked about how the Dow held up. That is because the Dow is pretty much all value-oriented blue chip stocks. These, like I mentioned with Intel, they don't fall or go up for that matter as aggressively as the overall markets for the most part, right? Of course, it's not a blanket statement, right? There's, of course, different things that can happen, but the Dow, generally speaking, more conservative plays, right? More conservative stocks, and they held up today. Some of them that held up and did well. Number one, Walmart. Walmart went up 1.5% today, went up $2. And this is a very interesting play, in my opinion. The risk reward is starting to look pretty good. We have a bullish divergence forming on the RSI on the 4-hour chart. We're about $15 off the highs, about 10%. So we're in correction territory. And if I pull up the yearly chart, you guys can see actually the 3-year chart. We're in an overall ascending triangle. We've talked about this before, and now we're more towards the bottom trend line here. So if this holds 138, pops above 140, we squeeze to 150, that's an opportunity in and of itself. But if we end up seeing the ascending triangle play out, this could end up breaking out. 155, 160, it's definitely in the cards. So keep your eyes on Walmart and on Mickey D's, guys. McDonald's, MCD. This one up 0.2% on the day. And this is another one that we called out recently. I think it was maybe like a month ago. We called it out. It was right before their earnings. It was trading towards the bottom of the channel here. 240 earnings came out. It shot the 255, 260 range roughly. And now, like it was before earnings when we called it out, it is back towards the bottom of the channel. It's holding the bottom of the channel now. We're popping up. Again, we had a 0.2% green day. We closed above the 180 SMA, but not above the 50 SMA. But that's where I'm going to set my alert, right at 250. If we break that point, this has a serious shot of going back all-time highs, in my personal opinion, towards the top of the channel. So overall, that's pretty much it, guys. Pepsi, AMD, Intel, Upstart, Adobe, Walmart, McDonald's. Hope you guys enjoyed this video. My little rants on, throughout the video. We talked a little bit today, so if you did, hit the like button, drop me a comment, let me know your thoughts. Make sure to subscribe. I check my analytics, guys. A lot of you don't subscribe, so do that. We're trying to get 25,000 subscribers by the end of the year. That is the goal. Make sure to also check out my Patreon if you guys want all my moves in real time. That's linked down below, and you guys could also get 50 free bucks from M1 Finance, 2 stocks from Webull, up to $1,600. All that linked down below. I'll catch you guys in the next video. Have a great weekend. Keep crushing the markets. Stay safe out there. Peace out.